Hello and welcome to another episode of Money Discourse. Man, it's been a roller coaster ride this past week, especially if you're a Tesla investor. We had oil getting whacked. We had the Fed's hawkish commentary. We've got CPI coming up this week, but it seems like the Fed's going to ignore it all. Rajan, what's happening?
Yeah, I mean, this week has been a bit of a mixed week because if you've been involved in a lot of these hot, beta names, the retail favorites, so to speak, like your Teslas and stuff like that, it seems like what's been a pretty rocky week. But in general, if you look at the S&P, it's actually been a positive week, and a lot of sectors have actually been doing quite well, like the banking index. But oil sector, again, ExxonMobil, I've said this before, is above 110, even though oil. The last time it was 110, oil is about 25-30% lower, but still, these energy names are strong. We actually saw the FTSE 100 reach the highest level since 2019, and they're largely populated with big oil cap names and miners and that. So you're seeing a lot of these non-retail hype stocks really leading this market forward. So in general, if you've had a diversified portfolio, it's actually not been a bad week. And overall, the market's actually done okay. We had that big news on Friday with the non-farm payrolls, which really lifted the market, because I think a lot of what the Fed has been worried about, what just general market has been worried about, is embedded wage price inflation. So we've already seen that. We've seen commodities falling across the board. We've seen nat gas now reach the lowest level since December last year in the US. European nat gas is 75% off the high. Oil is trundling just above the 70 mark. A lot of these other commodities, again, they're just all in the dumps. But the real fear is how much is this wage inflation that has happened over this past year going to embed itself into inflation for the long term. And so when we had this non-farm payroll report on Friday, even though the headline was slightly better than expected, the wage number was 0.2 lower than expected, and the prior month's one also got revised lower. So because of that, the market loved it, and we had this massive rally, and we ended up the day 700 points in the Dow, up almost 100 points in the S&P, and about 2.3%. We had a big day in the Nasdaq. So overall, ended up being a good day and a good end to the week. So that was good. But when we look at all the Fed commentary, overall, it's been so overall, if we look at, there's been a lot of the Fed members that have been making comments this whole week. And the underlying message from all of them has been that they are looking past the data, and they're still basically steadfast in their plan that they're going to go to 5.5%. That's where it looks like the terminal rate it's going to be. They don't want to preempt a lot of this positive data that we're getting on the inflation front, because in fact in Europe we had positive inflation data as well. In Germany, it actually came lower than expected as well. So we're seeing inflation go down across the globe, but the Fed doesn't want to make that same mistake where they react so quickly to just data and then change their policy on a dime. They want to stay the course and pretty much go to where they plan to go, see how it is. A lot of these guys are saying they don't expect to make any moves in rates until 2024. So it looks like we're going to have permanent 5% rates for the whole of 2023. And so the market in general didn't really like that much earlier on in the week. And that's why we had a lot of these high beta tech names and growth names really getting hammered relative to your banking names, and which did outperform your energy names. But then as we got to the end of the week, and especially that non-farm payroll, things did change. So if we look at some of the comments that we had Fed George, who's a non-voter, but he will be retiring, saying that longer inflation stays high, the greater chance it will get embedded, most costly to combat. All of them basically want to get ahead of it, saying that the whole message is that embedded high inflation is much worse than the alternative. So they are willing, their whole mantra, as we've said before, is kill people, get people fired. They want the job market to suffer. But the thing that's just not happening. The job market is so strong, and that is allowing them to continue doing what they're doing. They want employment rate to go up to 4%, 4 and a bit, but yet employment rate went down 2 notches to 3.5%. So it's a really weird one, because we're forecasting this recession, but we're forecasting this recession with real high job rate. So it's a hard one. It's hard to even get a recession if everyone is employed. Everyone can afford their bills. So I don't know how much that's going to really happen, but we can see that they're definitely killing demand, especially on the energy front. Even with all the China reopening, it didn't really help oil that much, and we've been trading like near a low. And nat gas as well, just warmer winter. I mean, we had a couple of cold days in Christmas, but it's literally like spring here right now. And now it's forecast that we're not going to get any snow in the northeast anyway until for the whole of January, which is, I can't remember the last time that happened. I mean, It's just really nice weather right now in January. So I mean, my heating is only on a couple of hours a day, 2-3 hours a day. That's how warm it is right now. So that's been underpinning this natural gas price, again helping inflation on the energy front. So this is just what we're seeing right now. So I mean, seeing these Fed comments, if we look at the overall market, and we've got a heat map here on FinWiz, and if we look at the overall performance for the week, if you look at it, a lot of these sectors, they were all up, but who were the biggest laggards? And it's basically big tech. Big tech did not join in the rally this week. So Apple ended up being flat, but at one point it was like 124 midweek. So we had a big rally coming towards the end, back towards the 130 mark. Microsoft has had a stinker of a week, down 7%. Same with Tesla. But again, Tesla was almost 100. And we had a huge turnaround on Friday, I believe. Yeah. So we were 101 pre-market and we ended the day at 113. So that was a huge, huge turnaround in Tesla. But again, that could have looked much worse if we looked at it Friday morning. And then Google was down 1.3%. Amazon, they announced job cuts, they announced this, but we actually traded 81 handle before rallying and getting up to 86, aided by Friday's performance. And we had the healthcare sector under pressure. But if you look at everything else, we've got energy up on the week, Walmart up on the week, the financial services, the banks, all of these were all up on the week. Healthcare was generally up on the week. So in general, the S&P 500, I think, fared pretty well, but it was just the big caps that did put a damper on the overall move on an index basis. So this is where we stand right now. So yeah. So what do you say? Mm-hmm.
Yeah, so inflation, this is the big thing. When are they going to get it down? WSJ have a interesting article. If inflation suddenly dropped and no one noticed, saying that inflation has slowed from June to November, when annualizing inflation around 2.5% from June to November. Bits of information are coming in showing that inflation is falling, but like Rajan, like you said, it's all the job market. They want to see a lot of pain.
Kill the jobs, get the people on their knees. That's what they need to get inflation. But that seems to be their mantra. Like, I feel like they don't feel like there's another way.
It's going to predominantly affect the middle class and lower class the most, unfortunately. So whichever way it is, they're saying, oh, inflation is a killer for the lower class, but then also the massive job cuts a recession is going to lead to is going to also be the same. So it's not like anyone's going to really win out of this. But let's go on to Tesla. Last week, they released their deliveries. Production was a record, almost 440,000. But what really disappointed was the number of deliveries at just over 405,000, and this sent the stock tumbling again.
Wasn't that far off your 395 estimate, was it?
Yeah. You just have to take Elon for his word. He knew that something bad was happening, and to be honest, they just have got a huge amount of inventory. Some saying it's around like 70,000 vehicles in transit at the moment. I have no doubt that it's going to be delivered, but the main issue is that the market thinks that Tesla are not going to grow at all this year. And Elon's commentary about in this upcoming recession to keep the margin where it's at or prioritize volume and make little to no margin or even negative margin, as long as the health of the company is actually not affected, is his preference. So I see Tesla taking a lot more market share in this upcoming recession that we're already in, I guess, but it's definitely affecting the PE.
If you think about it, like, where was these prices? And then they went on a tirade of price increases. And so if they bring it back to where it used to be at the beginning, I mean, because I don't know the increment of where it started and where it went to, but it was at least 15%. So I mean, in theory, they can slowly dial back and get back to what they were charging for these cars in 2020. And because, like I said, a lot of these raw material costs, at his own admission, has all come down. So the production cost hasn't got much. And realistically, I don't think they can really hope to maintain these margins for a long time. It's naturally going to come down, but
Yeah, I agree. I mean, the thing is, Elon was saying that the prices were embarrassingly high. So his intentions were always to lower them anyway. And it was just, the thing is that there was such a high order backlog and scalpers were obviously taking that margin. So Tesla thought, let's take that margin instead. And if you look at the Mackie, you look at pretty much all EVs have increased in price. And now what happened on Friday, the 6th, is that Tesla went ahead and discounted their Chinese Model 3 and Y. And we had a massive market capitulation on Tesla stock at that time, coming down from, I think it was at 110 to, like you said, 101 in pre-market. So they actually decreased their prices on average around, say, 10%. The thing is, we all knew this was coming. It's like the algos or whoever the funds were just like, okay, this is bad news. Let's dump the stock. And I was looking at it, I was like, I can't understand, like this is Tesla flexing their muscle. Elon tweeted recently saying that, Tesla can produce the car at less than 32,000, and Elon said, people still don't get it. So even with the current Chinese pricing, which is actually still 40% less than you get in the US, they're still making a decent margin on that. And like you said, with raw material prices coming down, we're going to eventually see that happening. However, the issue that we have is that these commodity prices and raw material prices are kind of negotiated up front. So normally there's like a 6-month lag until, say, like March or April. So when that comes to fruition, we're going to definitely see the price decreases offset by the cost decreases. But I think that in Q1, Q2, we're still going to see a bit of margin contraction, and who knows what that does to the stock. But it's absolutely been pummeled. We've seen the volume on Tesla is just insane.
Incredible. Liquid as anything. You can get any trade-off you want right now. Any trade-off. Like the liquidity is incredible.
Yeah, and if you look at the average volume is 111 million shares. This is double that, 220 million shares. Now let's look at Google, right? 27 million shares. This is like 10 times the volume of Google. I mean, it's an algo
paradise. Citadel are making, Citadel made record revenues this last year. They I think they did 27 billion as an HFT firm. And they had the year of their life. Obviously, considering the volatility, you would expect these HFTs to do really well. But when you've got liquidity like Tesla and they can just trade in and out huge positions, it must be nice. And it's just wild. Now the question is it a buy here? Everyone's saying, "Oh, this is the best buy in the world right now." I mean, it's a tough one.
Yeah, definitely. I mean, if you just look at the progress of Tesla, like it's 2022 deliveries match literally from 2012 to 2020. They just did in 1 year what they had done in the previous 8. So is it a buy? Tesla, well, conservative firm Edward Jones have actually upgraded Tesla from a hold to a buy. You're seeing Barron's and a few others all start recommending Tesla at this level. Whether it's going to go down not more, I'm not sure, but Cathie Wood has started buying shares. You've got the Future Fund buying as well in the 100 range. So it seems like, I guess it's a psychological floor at 100. And, I think it's a very good value compared to how well it can ride out the storm of this up and coming recession or that we're already in at the moment. I mean, compared to all the competitors, it's making stellar margins. And even if it has to reduce its prices even more, if you look at BYD, which is its main competition in China, their margins are around 1.7%. Whilst Tesla's is around like 17%. And from a PEG ratio point of view, the price of growth, basically you're paying twice as much for the BYD than you are paying for Tesla at the moment. And in terms of the stock price performance, BYD is down 7% whilst
let's see what they're saying, because I saw that, and in the PEG it's anticipated future growth, and people have now taken down that anticipated future growth, so that PEG might be a different number. But the main thing about Tesla, right, I've heard both sides. Obviously we talk about it with quite a few people during the week and stuff, and the thing is that Tesla is still worth more than the next bunch all combined. So like more than Toyota, VW, Mercedes, BMW, like all of them combined. And so on that aspect, people are like, and I mentioned it last time, is that if Tesla can't sort of prove soon that it does have alternative revenue streams other than just car sales, then eventually it's going to start being priced more like a car company. And then in that aspect, there's a lot. I mean, this could go down to 20. But the thing is, we all know what it's got in the pipeline. We've all seen it. All the videos are out there. So it's a matter of whether those come to fruition and other of these revenue streams come to light, whether the Cybertruck comes to light. Because right now they're selling 3 cars or 4 cars, and eventually that's not going to hold up a 300 billion valuation, even though it's come down from $1 trillion, right? Just selling 4 cars ain't going to do the trick. So that is what it all comes down to. So we'll see how it all evolves throughout the year.
They're still like the largest volume manufacturer of EVs, globally. So really it's all down to, is there anyone that can kind of catch up to Tesla? And it doesn't seem like it at the moment. If you just compare, like, the Model Y is at 25,000 units per week, whilst the Mach-E, it's like 1,250 a week, right? So it's like 20 times more they do on just that one.
It's worth more than all of them combined. So I think what happens is that Wall Street has definitely still pricing in that Tesla is by far the leader, because they wouldn't be worth more than all of them combined. But the real question is, was it ever worth $1 trillion? Probably not, right? At this current moment, And so we've had a massive re-rating, and people call 300 billion still a huge gain. And I've seen people saying if you bought shares in 2019, 2020, you're still massively up. But not just with Tesla, just as if with any investment, whether it be Bitcoin, you're buying it at 40,000, 50,000. If you bought Tesla just any time last year, you're down as much as if you'd bought Amazon, if you'd bought Microsoft, you bought any stock. It's just that Tesla is so actively traded, and it's one of the biggest retail stocks. The retail talked about stocks that everyone goes, oh my God, you're down this much on Tesla. But Tesla, it just because of the last month, it's been so severe that the downdraft. But if you actually look at it relative to any other stock, you pretty much had that same type of decline. So it's not like it's done anything out of the ordinary. It's just really puked out bed in this last month, probably aided by Elon's antics, which not maybe the 100% reason, but was I reckon part catalyst. You know,
if you look at say 2024, where we're going to be, depending on the economic situation, who knows? But I think with the Cybertruck, you know, we're going to have like 100,000 odd production in 2024, and that's going to probably bring in, you know, if they sell them at an average price of say 60,000, gross margins of 20%, you know, that's like $1.2 billion in operating profit. And if you look at the mega packs that they're going to actually start coming out with, Elon said that they are virtually limitless demand. The thing is, right now they can't produce enough of them. But in terms of all these gas peaker plants that are pretty much everywhere that are so expensive to run, those can be replaced with mega packs. And if volumes of the cars aren't going up as much as they want, they can divert the battery cell production to mega packs. And they're talking about like they'll sell about 5,000 mega packs in 2024 at a $2 million average selling price. 20% margins on there is about $2 billion in operating profit. So if you add all of that on, I mean, you don't see Mercedes, VW, Ford having those other revenue streams. And it seems like, full self-driving is the big one that people want to see. But behind the scenes, like, you know, with mega packs, even if it means, just say if the demand for those cars just go down and full self-driving isn't ever realized, that Tesla would take a massive dive. But there's still the mega packs, which even if they just carried on with that, I think because Elon has forecasted, and a few others have as well, that, you know, the energy business is going to be just as large as the auto business.
Do you notice what you're saying? A lot of Elon's forecasting.
Yeah, I know.
The problem is Elon is not there anymore. He's just on Twitter all the time. That's the problem. You know?
We just need to see a tweet of him with Tesla, the Tesla entrance in the background saying, "Oh, I'm back home." All he needs to do is that, and then you're just going to see.
Because you reference Elon so much. The problem is Elon has just been MIA for Tesla. But anyway, let's move on. Do you know another really interesting story this week is in crypto with Silvergate, which is a payment processing bank, and it's a real weird dynamic that is happening right now in crypto. And I just thought we'd just touch over it. Is where the actual crypto stocks, the crypto ETFs, are getting lambasted. That the Bitcoin ETF, the Ethereum ETF is, I don't exactly know the number, but it's trading like 40% below NAV, 35% below NAV. But where the Bitcoin is actually stayed pretty stable, same with Ethereum. So the underlying cryptocurrencies, they haven't crashed, but the actual companies are crashing. So Silvergate was down 40%. They had so what they did, there was a report coming out that they're going to cut 40% of its staff. And they took a $718 million loss selling debt to raise cash. They raised to cover $8.1 billion in withdrawals during the crypto meltdown. Then they came out with an official release where they reported their Q4 total deposits dropped to $3.8 billion from almost $12 billion in the prior quarter. And their total cash currently stands at $4.6 billion, and they cut that 40% in their workforce. So, and then they got the average deposits from digital asset customers dropped over almost $5 billion. So this absolutely pummeled Silvergate stock, and in turn pummeled Coinbase, and in turn that pummeled Mara, and it's all the other crypto related stocks. And I think the actual the faith in a lot of these are going on, but these investors are just flogging it crazy. But the thing is that Coinbase fell like 12% in sympathy on the back of this Silvergate. But you know, for those following the blog, following the Twitter page, you know that I put on a Coinbase trade to try to maybe take advantage, because I don't think Coinbase has suffered to the same level as Silvergate did, and Coinbase went to a low of like 32. So I put on a 20, actually put on a trade. We have it here. Where is it? Yeah. So I put on a 27, 29, 41, 42 sort of skewed iron condor for an $80 credit. So the $1 on the upside, $2 on the downside, and just to take advantage of the sort of massive move we had that was in sympathy to the Silvergate move. But again, it's just another company We've had so many crypto names just falling by the wayside, and it's just another one right now. What do you think is better? If I put a gun to your head, buy the crypto outright or buy the crypto derivative, i.e. Coinbase or some of these crypto related stocks which have been destroyed beyond reason compared to the actual underlying? It just seems phenomenal, like the drop in some of these stocks.
It does, but again, the market's not rational. Look at Tesla, like we were talking about. In terms of this, who knows how long it's going to go on for. If you look at Binance, they have been issued US subpoenas, and they are actually looking to see if there are potential violations of money laundering rules. And when I look at this, I think it's actually good that Binance is being investigated, and if there's anything really dodgy happening there, hopefully this will give clues to if these guys are above board. And if it is the case that they are okay, then you had a prediction that Binance might go under as well. And if that's the case, it's kind of like bye crypto. So I guess the more regulation that these guys have, I think it will be.
With Binance, I have a Binance account, and we've seen the massive amount of withdrawals. We've seen 5 billion, 6 billion, same like Silvergate happened in Binance, but Binance said that everything's on a separate account. They're not commingling funds and this and that. So I actually had quite a bit relative to what I have in Binance and stable coins, and I just withdrew it this week. And the withdrawal came into my fiat bank account within 5 minutes. I was so impressed. It was just, I did it, boom, in my account. So fair play to Binance. It doesn't seem like there's anything. So what I've just left in there is whatever crypto positions, and I'm just happy to just leave that in there. But now the thing is, the stable coins were getting 5%. Hey, I can get that on my US dollar now. You're getting 5%. It's just in my Selfie bank account right now, 3.75%. So why even have the risk of having it earn that interest via DeFi in crypto when you can get it just from your bank over here? So it just the opportunity cost of keeping it there and keeping it into a normal account, it just wasn't there for me. So I did that, but the fact that they actually withdrew straight away, and then that CZ, the CEO of Binance, did note that we can handle any withdrawal. If you want to withdraw, and then true to their word, they're doing it. And so in that aspect, that's pretty good. So
they managed to survive that whole FTX calamity time, and just because they were able to stay solvent, they were able to live another day, I guess. So I don't know when things are going to get better for crypto. It's just going to slowly start ticking up.
I think if crypto can avoid another catastrophic failure, we can form a base. And I don't know if we're going to really go up that much more, but it does. I don't think it's going to go down that much more. Like it looks like Bitcoin,
it's around
even though it's dropped.
Right?
It's around 17,000. But one thing you've noticed with Bitcoin, especially, the volatility has reduced dramatically. We don't have 10% moves. I can't remember the last 10% move in Bitcoin. It's all a couple of percent on a bad day is down 3%. And weirdly enough, it's actually acting like a currency. In fact, it's probably less volatile than some of these currencies out there. You look
at the pound dollar going up and down.
The pound dollar went to almost parity, back up to 122. That's a 22% move. We haven't had that same thing in Bitcoin for quite a bit of time. So Bitcoin is actually doing, it's actually so stable right now that it's quite weird and quite boring in a way. Ethereum is just hanging around that 1200 mark, obviously a bit more volatile, and altcoins will always be altcoins. But I think Bitcoin is sort of come out quite strong at the back of this, just purely because of the way it's mined and self. But it's really the companies associated which seem to have the real brunt of it.
And the main holders of Bitcoin are the ones in control right now, because if they start liquidating these big accounts, predictions that it's going to go below 10,000, and luckily that's not the case. I don't know what is the percentage of crap coins compared to Ethereum and Bitcoin.
I think what it is the altcoins, especially the crap coins, that they're down so much that they basically don't even make up probably 1% compared to the overall crypto market cap. When you include like the top 10 with the stable coins, crypto and Ethereum, I reckon all these crap coins, they're virtually worth nothing now. They're absolutely, the Ponzi scheme has ended. The scams have ended with Ethereum Max, with Kim Kardashian. We've seen this whole thing with Jake Paul and his kitties, and the CoffeeZillas talking about how he's basically, how that whole thing was a scam. And then, you're just seeing how so many of these celebrities were all involved intentionally or unintentionally with all of these scam coins. And I think that period of time is for now put to bed, but the markets always repeat themselves over time, and there's going to be another hype euphoria stage, and they'll probably all make a comeback, and hopefully people have learned their lesson, but no one really does. When they can see this is the best thing since sliced bread, so it's gonna be crazy. But now looking ahead, like you said, we've got CPI coming up this week. That's on Thursday, so that's going to be
What's
really
your prediction?
Well, if you look at looking at what the estimate right now is 6.5%. That's after getting 7.1% last month. So it's expected to fall a further 0.6. And bear in mind the high was 9.1. But also remember, we're getting to that time that when the whole Russian war started and everything went a bit crazy from February, March, April. So when we enter March, April, May, the comparables, if you look at when oil hit the high, I can't remember exactly when it was, but it might have been March, April, May, June, around there. So you're going to be seeing 40% deflation in oil price. Nat gas, when it was above $10 and it's now 4, that's a 60% deflation. So come May, June, July, we're going to see that inflation print at, I would say, 2. That's my prediction, just purely because of the massively high comparables that we had last year at the peak of the Russian war, when all these commodities went through the roof. And we've already seen so much less housing activity, this and that. I think we're going to hit 2. But again, that doesn't mean prices are low. It just means the rate of price increases year on year is going to go down to 2%. Yeah. So my guess is, I reckon mid-year we're going to get 2%. And
I think we're going to get there too. But what's going to actually happen to interest rates? And you know who decides that? People like this guy here. He's sitting and he's talking about how they need to increase employment to contain inflation, but he's sitting there in the Bahamas just having a great time, whilst the everyday hardworking people of the country are going to get shafted. So
that's how it is. That's how life is.
That's how it is. It's fine. It's fine.
Because they're sitting down there in their bed of got $100 bills everywhere, and they're just like, you know what? It must be hard for some people living with while they're getting massages from.
I don't see anything bad happening there. Like, everyone's good. Yeah. The restaurants are packed.
Got damn Brazilians girls behind them, and they're like, oh, it must be tough. Just that's my prediction. I don't know what's going to happen, but judging by what the Fed are saying, I think we got another. All of them seem to be in unison that we're going to be above 5% on rates. I think we're going to get a 25 basis points in the next one. We've got the 50. A lot of people are calling 50 or 25, and we've seen certain Fed members saying that they'll be fine with both. It could be 50, but I think 25, just because I genuinely think this next inflation print 6.5. I don't think we're going to be like 6.2, but I think we're going to be around 6.4. That's my guess. We'll see. The core now, I think we're going to shift from the headline CPI to the core. Core will have a lot more meaning. And so we expect a month-on-month 0.3% rise in core inflation. So we'll see how that sort of pans out. We actually had inflation numbers out of, was it the Eurozone or one of the big European nations? And what happened is that the headline CPI went down a lot, but the core went up. And then the market didn't like that day. So we had a rise in Bund futures. Oh, yeah, so there it was. The Eurozone December CPI came in at 9.2% against a 9.5% estimate. So we did come down on the headline, but the core was 5.2, which was above the 5.1 estimate. And that was a record high for core CPI in the Eurozone. So now I think, a lot of the shift is going to happen onto core. And that's where I think the market's going to react more based off the core number than the headline CPI, because we already know that these energy prices are going to show massive downturns year on year over the next few months. So we just want to see inside. Food inflation, I still think, is the one thing that I have not seen come down. You're going to see used car prices coming down, definitely. Yeah. But food is where I just don't see any deflation right there. It's just ridiculous.
Your guys' energy is coming down. Ours is going up still. We're talking here in the UK is just insane. Just imagine we'll be paying 50 pence per kilowatt hour if it wasn't for the government subsidy that brings it down to closer to 30 pence a kilowatt hour. It's just insane. And that rate is set to go up from February. I just can't believe it.
It's very confusing. A lot of these people, a lot of these energy companies, like you said, they have pre-bought these at much higher prices. But so if I just add this here, this is the European natural gas. Like year on year now, it's down 21%. On the month, it's down 50%. UK nat gas is down 55% on a monthly basis and down 21% year on year. So we're down from last year, 21% in the US, 21% in UK. In fact, in the US, it's down 4%, but you're going to be paying 50 pence. It's just me. Look at this. This is insane. Yes, even if we go down to 5 years. In fact, we're at the low end. Actually, no. If you look at the 5 years, it was obviously much lower. But from September 2021, we're back at those levels in the UK and Europe. And if you look at from the high, so I mean, I could imagine Scottish Energy, all of these British Energy, they were buying up here at 550 and all of this, and now it's come down here. But all the consumers are still paying these prices, or what the government has to subsidize them. So I think what it is, it's going to be next
competition.
Year.
You can't choose to say, oh, I'm going to go somewhere else for energy. You're stuck with your rates, meaning like, it's just the wholesale rate. You have to pay it. So, and this is the best thing about being an energy company is,
like look at Europe. So Europe, they have put a Russian price cap at I think it was like 260, 270. Hit high 340. We're at 69 right now, and it wasn't. I mean, last time it was 69 again, same as the UK, was September 2021. But I mean, bear in mind, if you look all the way back here, we're looking at 13, 15. So obviously, still up a lot from the historical norm, but from the high that happened back in August last year, it's gone down massively. But we'll see. I think for Europe and the UK, it's basically next winter things should, in theory, reset, and people just have to pay the poison right now. But I mean, just before we end this, just a reminder again, there's a lot of good updates on the Money Discourse Twitter feed. Been regularly updating it during the week. You can see some of the major commentary from the Fed, some of the earnings. We've got Southwest here, and as we enter into earnings season, so I mean this week, and I think after Martin Luther King weekend, we're going to see the banks start reporting, and we're going to have all the flurry of earnings reports. So all of it will be up on this Twitter feed. You can see like some of the major things that are happening on those. So feel free to subscribe, or at least have a panda and have a look. Also, again, we'll be putting up all the trades that we do for your entertainment purposes only, to see, so you can track the portfolio and just see how bad or good I do this year. And so we'll see how it all goes, so.
We're just wishing all of you guys a prosperous new year with their portfolios, because I'm sure like pretty much everyone's listening, has had a crap portfolio, unless you're in cash, like some people I know.
Unless you bought all the energy names, as long as you're not on the typical retailer buying your Nvidias and Teslas and Apples and Microsoft, you buy all these other things. This year really will be a stock pickers market. You're not going to have some 18-year-old person who's traded for 6 months create his own Discord page and claim to be a guru charging money to go follow his trades. Now you're going to really have to know your stuff to pick this market and see how well you do. And so, I've been in the markets now for 20 years, so let's just see if that counts for anything or if it counts for nothing. So we'll find out, So
one thing we have to say is just don't go hard in until the Fed pivots and
stay leverage free. Yeah, stay leverage free.
Leverage
is what will kill you.
To be honest, I mean, if this is the bottom of the market right now, who knows? And if you do get into any positions right now, you might make an absolute killing. But probably it's best to sacrifice 10, maybe 20% of gains right now and just wait till the Fed actually just U-turn. And when they do, that's when you should potentially go hard.
2% mid-year, when we hit that 2% core headline inflation.
As soon as Jay Powell says, we're cutting rates by 2% or whatever they're going to say.
As soon as he said we pause, I think we're done. We've hit the terminal rate. Like, I don't think they're going to cut it till next year or at the best end of this year. But as soon as they go, we're done with our rate increases, we've got to our terminal level, that is when everything can be reset, And to be honest, I don't mind these high rates. They're good for the old cash balance in the ISA. But if you've liked what you've heard, please subscribe, give a like, and we'll catch you on the next one.